Charlie Munger has an expression, and this is absolutely true in investing. He goes, if I knew where I was going to go, if I knew where I was going to die, I just never knew. And that's a lot of risk management. If people ask about risk management is knowing where you don't want to be. You don't want to be weak money. Okay? You never want to be a forced seller, because you never want to sell something that you know is going to bring back value whenever the economy recovers. So, you don't. That's why you don't want debt. You don't want companies that eat cash. You may not want unionized companies or just know what your personal pet peeves are in terms of where you want to stay away from. And that, if you know that, you can avoid a lot of mistakes. And a lot of investing is just about avoiding mistakes.
What are some of the best investment books you read?
The first book I read was the John Train books, the Money Masters book, and that had Warren Buffett and Ben Graham in it. And then the Midas Touch, which is the first biography on Warren Buffett, again by John Train. And this is right before I was choosing business schools, and I had a choice between University of Virginia and Columbia. And Jimmy Rogers was teaching at Columbia at the time, and UVA is more of a general management school. And plus they had, this was back in the early 90s, they had classes or tests on Saturday at UVA, and they had Fridays off at Columbia. So it was a pretty easy decision that I chose to go to Columbia. So when I get there, I'm thinking I'm going to take Jimmy Rogers' class, I'm going to learn how to be an investor. And of course, the first day I get there, he's on a 2-year sabbatical writing a book, so he's not going to be here during your academic career. Great. And I get there, and they're teaching all this efficient market stuff, and it's dry, and I get this securities analysis professor for my securities, and I hated it. The guy was so dry, and my family had a business, so that during that break of the summer between the first and second year, I went back to work for her. And I hated working that type of business, so when I decided to, when I got back to school for the second year, I decided that I definitely wanted to be a value investor, not just an investor, but a value investor from reading those books. So, and it took a long time to get a job in value investing. Because it's not like you can work for Fidelity and they're going to teach you about value investing or anything like that. You got to, first of all, you're going to learn it more on your own, but just to work for someone who actually knows it. Back in the 90s, there were about maybe 30 or 40 shops that knew them. They were all 2 or 3 people shops. It was very hard to break in to value investing there.
Have you heard of Charlie Munger's comment that, in his view, John Train has limited investment insights?
What a good book.
Have you read? Anybody heard? I had that comment somewhere.
Authors have a way of making something. They may not know what they're talking about, but it certainly changed my life, right? So God bless him. Some people can act, but they don't. Some people can act like a scientist, but know nothing about science, but they can mimic and write about them. I mean, they
write well.
Did you ever read Memoirs of a Stock Market Operator, the Jesse Livermore?
Yeah.
That author didn't know much, but he captured the heck of the story and made it sound very, very exciting and very real. And I think most people will say he captured the essence of Jesse Livermore in that book. So, I mean, that's what authors do. They're able to capture the essence. Doesn't mean that they themselves are very good stockpickers, but they know how to capture the essence.
All right.
Are you more top-down? Or I guess you're more bottom-up. But
Yeah, definitely bottom-up.
Do you consider the macro scenario at all?
Yeah, of course you do. I mean, you can't help but have an opinion. But do I act on that opinion? No. I mean, at the end of the day, you just assume that things are going to get screwed up and that there's going to be inflation. And that you just make sure that your companies can price inflation through their products or services over time, not in lockstep, but over time, that they can price inflation through. And that's the only thing you can do. Yeah.
When you invest, do you also consider diversification of your portfolio among different sectors, or bottom-up?
Well, you do. I mean, not consciously, but I did notice that I own the Washington Post, which is half education. I own Apollo. I own Tico. So that between them, that's 10%. And I own this Stanley Capital in Korea. That's another 4%. So I have 14% of my assets in education, 10% in U.S. for-profit education, which is under attack right now by the Obama administration. And so it just happens that way. But not on purpose. Obviously, I wouldn't want 50%, but I guess I can live with 10 to 14.
What about international exposure? Like,
I don't own stuff in China. I don't know anything in Brazil. And so but I do own stuff in Korea. I do own stuff in Oslo. I own some stuff in Switzerland. A lot of these ideas are fed to me by my friends. I'm very fortunate.